The price of Bitcoin recovers and reaches the top of the symmetrical triangle in which it has been trapped for almost 3 months. In this weekly graph, we can see an inverted hammer candlestick, which was formed in the week starting February 28th to March 6th. A candlestick which in the lower part of the downtrend has a positive connotation. Following this, the shooting star candlestick indicates a movement of indecision. Later, we see a bullish engulfing candlestick between March 14th and 20th, and this week a continuation move to the upside, reaching $44,400, a zone which makes up the higher part of the macro range in which the price has been trapped for almost 3 months now. With the deployed averages, we can see that the higher part of the macro range coincides with the point in which the 20 and 50 period averages are found. And we can see that both averages have crossed each other on the downside, a negative sign which confirms a downtrend, although let's not forget that the averages are a late indicator. If we start seeing candles closing above those averages with a volume input and a continuation move, that negative connotation will be invalid. In the daily time frame, we can see a price compression. At this point, the price is touching the top part of the symmetrical triangle, which we mentioned last week. As we said, if we saw candlesticks closing above the intermediary level of $42,000, the price could then go on to test the $45,000 zone, which also coincides with 0.61 Fibonacci. Over the last 3 days, we have seen nearly full body candlesticks with volume input. To really see a positive change to the upside, we would have to see daily candlesticks closing above the $44,500 zone, and then also candlesticks closing above the $45,500 zone, displaying harmony between effort and result. With the daily time frame moving averages, we can see that the 100 period moving average in purple formed a resistance last week. On the 22nd, the price managed to close above that average, and on the 23rd, it also closed above the 100 period moving average, although it went on to test the $41,800 zone. On the 24th, we were left with nearly full body candlestick, the 3 white soldiers pattern. Although let's not forget that the patterns are confirmed when a breakup occurs. In this case, if a trend reversal took place, if we take a look, the direction of the averages are starting to head upwards. If this trend continues, the 20 and 50 period moving averages could cross each other. Specifically, the 20 period moving average would surpass that of 50. It's worth noting that the Relative Strength Index, or the RSI, has managed to overcome 61 points, a zone which marked a divergence on March 1st. If it continues its movement, it would confirm that the potential downtrend, which was warned by the divergence between February 14th and March 1st, would not be possible. To see a continuation movement, first, we'd have to see candlesticks closing above that $44,500 zone for the price to later draw candlesticks which close above $45,500. If that sequence takes place, the next target would be the $48,000 zone approximately. If, on the contrary, we see candlesticks closing in this zone, the $44,000 zone, the price could go on to test that relevant intermediary level of $41,500 approximately. In the SP 500 index, yesterday it closed at 4,520 points, continuing with the clear bullish movement seen over the last few days. Onto the SP 500 futures chart, we can see the movement it forms with more clarity. The index has surpassed 4,400 points and has gone on to test the next resistance of 4,500 points and 0.61 Fibonacci, a zone in which candlesticks have closed above it. If it manages to maintain that zone, it could move on to the 4,600 points, which represents 0.38 Fibonacci. The Fear and Greed Index, which measures the sentiment in the market, has improved and moved on from feeling fear to that of neutral. And the amount of bitcoins available in exchange reserves has dropped to 2,298,000. From March 7th, it has dropped by 61,000 bitcoins. And in this chart, we can see the balance of retail Bitcoin holders which continue to store their cryptocurrencies, from fish to octopus and dolphins. However, whales and large whales are maintained parallelly and have even reduced their exposure since the symmetrical triangle pattern that we mentioned started. If we see whales increasing their exposure, we would then potentially see a continuation movement of the price. But if there's no great demand for Bitcoins, the supply will end up decreasing. Investment funds, on the other hand, are at an all-time high for Bitcoin holdings, although they remain flat, so it seems like they're not helping with this upward momentum. Today, March 25th, is a very important day because 5 billion worth of Bitcoin options expire. The max pain is set at $42,000. Between $39,000 and $42,000, the number of call and put options are balanced. There were the same amount of call and put numbers. Therefore, liquidity providers could win. However, between $40,000 and $42,000, there were 8,700 call options versus 4,600 put options, which is why the outcome favors the bulls. Between $44,000 and $45,000, there were 10,600 call options against 4,300 pull options. The net result favors the bulls. At the close of these markets at 8 a.m. UTC, the bulls won. An important development to keep in mind is that El Salvador plans on launching $1 billion worth of Bitcoin funds, and the next period to watch out for is between March and April. On April 6th, the Bitcoin 22 event kicks off, which aims to continue to foster mass adoption. Bukele, the president of El Salvador, could touch upon the $1 billion fund. The governor of Florida, Ron DeSantis, on the other hand, revealed that he'd like to see companies paying taxes in the form of Bitcoin and cryptocurrencies. In addition, the director of the Luna cryptocurrency announced that they'll be acquiring 10,000 Bitcoins to back their protocol. On Twitter, he assured that this will kick off a new era of the Bitcoin standard. The Federal Reserve announced just a few days ago that it is raising interest rates by 25 basis points and that it will reduce its balance sheet over the coming months. As we saw last week, this can put a damper on the economic growth, although it can also help reduce inflation. However, until May, there will not be a new Fed meeting, so over the coming weeks, there could be a break in the markets. As the market seems to have disregarded this decision to raise rates and see stimulus, we could have a quieter few weeks in the traditional market and therefore in crypto market too. The inflation figure continues to be very worrying. In the Eurozone, a rate of 6.2% year-on-year is forecast for the month of March. And in the United States, the forecast is 7.9% for the month of March. In this table, we can see that all goods and services have risen in price, especially energy. The price of Bitcoin gains momentum and goes hand in hand with the upward movement of the traditional markets. Retail Bitcoin investors continue to accumulate their cryptocurrencies.